So a lot of people hear the term crypto IRAs and think, hey, if I could just invest in a Bitcoin in my IRA and it 10 times like it has in the past, I'm pretty much set for retirement. But from a financial planning perspective, it's not that simple. There are many questions that you need to ask before even going down this route of holding crypto in an IRA. How do the fees compare? What's the risk and advantages of holding crypto in, say, a taxable account versus an IRA? Are there simpler options like a Bitcoin ETF that could be a better fit for me? I'm RJ Weiss, certified financial planner professional. In this video, I'm going to break down what a crypto IRA is, what are its pros and cons, when they might make sense for you, and really the key things, key questions to ask if you're considering one. So first, what is a crypto IRA? And there's really no textbook definition, IRA's guideline of what a crypto IRA is. It's really just a marketing term. What we're really talking about here is a self-directed IRA. And these accounts follow the same rules as, say, a traditional or Roth IRA, but it just gives you the ability to invest in a wider range of asset classes. So the IRS doesn't define what crypto IRAs are. Instead, the law simply states what you can't invest in with an IRA, and that includes stuff like collectibles like art or even life insurance. So everything else, including real estate, private businesses, precious metals, and now crypto, are fair game in an IRA. But of course, a lot of traditional brokerages don't offer that access, so a lot of people turn to self-directed IRAs for access to holding crypto. This, of course, comes with some trade-offs. With the self-directed IRA, traditionally, it's not a fiduciary relationship between you and the provider. So these companies are not your financial advisors, but their role is mainly to give you access and the administrative backing to hold these assets in your IRA. So this comes with a lot more responsibility on your end as far as, what is suitable for you to invest in. You are the one making that decision. And of course, there might be some more paperwork and legalities that you might have to deal with depending on what type of self-directed IRA you have. But at the end of the day, it's the same tax structure with the traditional. You're getting that tax-deferred growth. With a Roth IRA, you're getting that tax-free growth. So calling it a crypto IRA, even though it's just a marketing term, doesn't change the effective definition of what the IRA does. So on top of this, there are then two types of crypto IRAs. The first one we'll call more or less like custodial-directed trading accounts. This style feels more like a traditional brokerage. You'll then log in through a self-directed IRA platform that partners with an exchange like Coinbase. So the feel of it is often like trading in an exchange that you're very familiar with, such as like a Coinbase, Kraken, or Gemini. So what's happening here is behind the scenes, the custodian is holding these assets on your behalf, reporting to the IRS and charging fees typically for this service. So for most people, this is the more straightforward option. It gives you some flexibility to buy and sell, but within the rules of an IRA. The second type of IRA is checkbook controlled IRA. This is where you have like an LLC that you own and manage, and then that LLC opens a bank account, funds are invested in that bank account, and then funds are directed towards the investments of your choice. So this could be on a custodian, this could be on a crypto exchange done in with your own private keys. So there's a lot more flexibility in this. Effectively have checkbook control, and you can move money and trade it directly without going through a custodian for every transaction. Obviously, the huge trade-off is here. There's much more compliance, there's much more paperwork, there's higher setup fees and maintenance costs, and greater risk if you misstep on the IRS rules. If you were to mess up on those rules, your IRA and the transaction would deem prohibited. You could lose the tax advantage status of the entire account. So in practice means, the whole IRA could be treated as distributed, triggering taxes and potentially penalties. So a lot of risk with these, really only for advanced traders. And let's face it, if you're watching a kind of a crypto 101 video, this is probably not the right choice for you. So how does a crypto IRA work from day to day then? First, you can either roll over funds to the account. A lot of people say roll over a old 401k or a existing IRA that they have. You'd also make new contributions. So keep in mind those contributions have to be cash. They cannot be existing crypto. If you wanted to, say, invest existing crypto, you'd have to sell that, incur the potential taxes that come with selling that crypto, and then invest cash into the IRA. So the same IRS limits apply. You have $7,000 for contributions if you're under 50, $8,000 in new contributions if you're over 50. From there, you're going to place trades in the custodian's platform. This really looks like a regular crypto exchange behind the scenes, but on your behalf, the custodian is executing those trades and handling the reporting to the IRS. So with most types of crypto IRAs, you do not hold the keys. Your crypto is stored by the custodian. Typically, it's held in cold storage, which is safer than being in hot storage or online, but it's not necessarily risk-free. So some crypto IRA custodians do mention that they carry insurance, but it's important to understand that this isn't like your typical FDIC or SIPC coverage you get through a bank or a brokerage. The coverage will vary by provider and really is subject to more fine print than, say, FDIC insurance would be. Much like a homeowner's policy, certain things may be covered, certain things may not be covered. So you really need to understand what isn't covered when choosing a self-directed IRA. So mentioning this is just want you to understand that, account being insured doesn't mean it carries like the same protections of FDIC or SIPC insurance. So now we kind of have the nuts and bolts of what a crypto IRA is and how it works. Let's start looking through the financial planning lens. The first thing you need to understand is, what is the goal of investing in retirement? The goal is to build a realistic plan that gets you to your desired level of savings on a timeline. That means investing in a way that balances growth and risks, so the money you need later will actually be there when you retire. So from that perspective, it's hard to argue that, when you're setting and trying to achieve goals, putting a large amount of your assets into a crypto IRA in a volatile asset is the right choice. Bitcoin, other digital assets, they've gone up a lot, but they've also had a lot of volatility. So that volatility makes it really difficult to rely on them long term as being kind of a cornerstone of your retirement. So that doesn't mean you can't and shouldn't hold any crypto in an IRA. At the end of the day, plenty of traditional investments like stocks also have that volatility too. But just like you would want to diversify in an IRA with stocks and different types of stocks, and maybe bonds and incorporating other assets, overall, the way I like to think of this is digital assets can be part of your portfolio, but they really shouldn't compromise of the whole thing. As having some exposure might add some potential diversification, but it's not like a shortcut to retirement. It's just one asset class with a very limited history compared to really the decades of data that we have on stocks and bonds. So how much, or if any crypto, should you be holding in a IRA? Here is my personal rule of thumb, and this might change for you, is I don't hold any more than 10% of my assets in riskier alternative assets. So that includes individual stocks, crypto, or any alternative outside of a traditional portfolio that compromises more than 10% of my net worth. So that way, 90% of my portfolio is targeted, has a realistic plan, and it can get me to my savings goal. The other 10% gives me some opportunities to explore some alternatives. Maybe it's going to help, maybe it's going to hurt, but either way, it's not going to be like a black and white. If this asset class goes down huge, it's not like I can't reach my retirement goals in the long term, because you always want to approach retirement investing with a target and a realistic framework for how you're going to achieve that. Continuing with the financial planning lens, let's talk about tax efficiency and asset location. So if you decide that crypto belongs in your portfolio, the question that becomes, should you hold it in a taxable account or an IRA? So asset location is about putting the right types of investments in the right types of accounts. You want your tax efficient investments in outside a taxable brokerage. You want your tax inefficient investments inside of an IRA if possible. So now crypto is kind of a mixed bag here. On one hand, you have the potential appreciation of crypto. This is what most of people look at. If Bitcoin is at 100,000 today and it goes to 1 million, that's 10 times the appreciation. And then you don't have to pay, depending on where you hold your crypto in a Roth or traditional, there are different tax circumstances, but overall, that's a more tax efficient investment if you get large appreciation. That said, you can also make the case that crypto is one of the more tax efficient investments available today. That's because how tax loss harvesting works. Crypto does not have to abide by the wash sale rules. So you can essentially buy and then rebuy crypto at the same price. That means you could sell crypto at a loss today and then rebuy it back immediately and have a loss to carry forward on your taxes. Over time, that can create tax savings, although that benefit diminishes the more crypto goes up. So for someone with a shorter term horizon, this benefit may outweigh the potential appreciation. For someone with like a longer term outlook that really believes in the appreciation, holding it inside an IRA might be the better tax strategy. So now looking at crypto IRA costs and fees that you're going to see. There's a big difference when you compare crypto IRAs, self-directed IRAs, to what you find with, let's say, a traditional brokerage just in a Roth IRA. So traditional brokerage fees are just minimal. You might pay like 10 basis points, so 0.1% of in an ETF or a mutual fund, a target date retirement fund, and that's going to kind of be like your entire portfolio. There's no sales loads in most brokerages today, so that's something you're not dealing with. So the cost structure is pretty simple. Some accounts are starting to have monthly maintenance fees, like Robinhood Gold membership at $5 or whatever that is. But overall, the cost structure is far more simpler and efficient. Vanguard, you're not going to pay any monthly maintenance fees. if you go like paperless billing. So, there's a chance to have like zero monthly maintenance fees and just like a small annual expense on the ETF or mutual funds that you hold. Crypto IRAs are different. You may face setup costs, you may face monthly maintenance fees, and then, two, you got to look at your transaction costs. These tend to be about 1% of the crypto from the provider is charging it. But then some of these investments are not as, say, efficiently traded as, say, an S&P 500 index funds. You're also looking at larger bid-ask spreads for here. So the transaction costs, especially if you're buying and trading frequently in these accounts, can really add up. That said, there are some free accounts now that are self-directed IRA providers. So if you're buying and holding, you're essentially just paying like one upfront transaction fee around 1%, and then you're holding free for lifetime. So that in a way could be some cost savings. And then only when you sell do you incur another transaction fee. So for someone holding, 10, 20 years, that can come out ahead. So let's put this all together and look at the pros and cons of holding cryptocurrencies in a self-directed IRA. The pros are you get access to a new asset class. A crypto IRA gives you ability to hold digital assets inside a retirement account, something you can't do with like a standard brokerage, and gives you like diversification potential. Then there's the tax advantages. So in a traditional IRA, growth is tax deferred until withdrawal. In a Roth IRA, qualified withdrawals are tax fees. For long-term believers in crypto's growth, this can be, very appealing. The cons are you're going to have potentially higher fees, setup fees, custodial charges, trading commissions, and bid-ask spreads all can add up. So they're much higher than the near zero cost of holding index funds in a traditional account. There's then the security and custody risk. Unlike brokerage IRAs protected by SIPC, crypto IRA assets don't have the same safety net. So hacks and custodian failures have happened before. People have lost assets. So that's another risk that you need to keep in mind. There is then the loss of tax loss harvesting. So holding crypto inside an IRA eliminates one of the most valuable tax strategies available in a taxable account. There's also then complexity and compliance. So self-directed and checkbook IRAs carry more paperwork, higher audit risk, and strict prohibited transaction rules. A misstep could disqualify the whole IRA account. The last con is just the volatility and limited history of crypto in general. So cryptos have experienced extreme price swings and lacks the long-term track record of more established asset classes. So that makes it difficult to rely on it. It's really like a cornerstone for retirement. So bottom line is that cryptos can be a tool for accessing emerging asset class in a tax advantaged way, but they do come with meaningful costs, risks, and trade-offs. And for most investors, they should only represent really a small portion, if any, of an overall retirement strategy. So let's look at now at some alternatives to crypto IRA. I think the natural next question is why not just invest in, say, a Bitcoin or Ethereum ETF? These are the simpler solution. And if you were just going to say hold 1% to 2% and wanted like a small exposure, that might just be the simplest solution instead of setting up a separate account, especially if you don't have a lot of money to invest today. The fees, you need to weigh those for yourself. Most of the newer, you look at the crypto digital asset ETFs, those fees fall in like the 20-25 basis point range. So that means if you hold an ETF for many years, that fee compounds every year. By comparison, some of the crypto IRA providers are, no monthly maintenance fees and just charge that upfront transaction cost of investing, say, 1%. Obviously, if you're paying additional fees on top of that, such as you would with a checkbook control IRA, you're looking at much more heavy fee difference between the two. Another thing to think about is the exposure you can get to crypto in an ETF is a lot smaller. If you're just looking to invest in Bitcoin or Ethereum, it might make sense to go the ETF route. But if you want access to a more diverse range of cryptos and say, building your own kind of crypto portfolio of different asset classes, then a self-directed IRA makes a lot more sense. So security is another thing to think about here if you're choosing between an ETF or a crypto IRA. In the ETF, you don't directly hold the crypto. So what you're doing is you're owning shares in a fund that tracks it. That means you're relying on the ETF's custodian to handle and care for that crypto. With an IRA, you have more like direct control of the crypto itself. It's held by a custodian on your behalf. So that comes with a little more responsibility and a little more risk, but a little more flexibility because the assets are truly yours under there. Another important distinction I want to add here is ETFs are SEC regulated, so you get that extra security layer. Crypto IRAs, you got to rely on the custodian, and all these have varying safeguards, insurance, and so forth in place. So overall, it's not that they don't have compliance and so forth, it's that the compliance isn't as strict as something that's SEC regulated. So with that in mind, now let's talk about who crypto IRAs are really for. At the end of the day, a crypto IRA isn't for everyone. It's not like a must-have asset that you need to have in your retirement account. And it's definitely not a shortcut to retirement. If you're wanting to invest in crypto to say 10 times your current investment and really shortcut your retirement savings, it's really the wrong mindset to approach here. So a couple things to keep in mind if you're considering a crypto IRA is first is you want to think long-term. If you're going to invest in something, really invest in it. This shouldn't be something that you should get in and out of or look for trading. You want to hold this asset 10, 20, 30 years and really plan to keep it long long term. That'd kind of be the first rule that I would suggest to someone to go ahead and hold crypto in their IRA. If they want to do that, they really got to be thinking long term for that. It's not a short term trade. Second thing is you want to weigh the tax trade-offs. It might be more efficient to hold crypto inside of a taxable account. There are no dividend distributions with crypto. You can take advantage of that tax loss harvesting, while holding an IRA is going to allow you to take advantage of large appreciation if that happens. And so just weigh the pros and cons yourself, look at your tax situation, decide what's right for you here. Third, consider like what is a good allocation size. Again, my personal rule of thumb is try to keep it under 10%. If you're maybe just looking to like dip your toes in 1 to 2%, maybe an ETF is just a simpler solution. If you want more flexibility, more access to coins, then choosing a crypto IRA provider might be right for you. Just understand what the fees and trade-offs are. And finally, just know your risk tolerance. If crypto is going to go down 40%, you're going to sell and then get back into traditional investments. Like this isn't the right choice for you. Crypto IRA really appropriate for someone who believes in long term, the idea of crypto, what's behind it. It's not something you want to get in and out of. You really got to decide and commit to say like a set percentage, whether that's 2%, 5%, 8% of holding crypto in your IRA, and really don't let that look to rebalance if those get way out of whack. But if you would sell if there was a 40% decline, it's definitely not the right choice for you. So crypto IRAs, again, it's a marketing term. They're heavily marketed. And if you have a very strong conviction in crypto and want to add a small slice of crypto to your retirement portfolio, they could make some sense. But just go in with that like long-term mindset, and it's not going to be like the foundation or a shortcut to retirement savings, but the ability to add some diversification, and it's something that could potentially help. If you like this video, please give it a like. I like tackling these more complex subjects that often aren't very black and white of what you should do and give you some more angles to think about. So I do this often. Check out some other videos on my channel for more examples.